To the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Pure Gold Price Club Inc. Ticker is PGOLD The price at the point of filing is $28. This is not a recommendation, not advice. This is please do your own diligence before investing into anything. Description. Pure Gold Price Club, PGOLD, is the second largest grocery chain in the Philippines with 15% of the modern grocery market. Leader has 22%. The company estimates that modern trade accounts for 30% of the total grocery market. So PGOLD has 5% of the overall slice, giving it a fairly long runway to grow. The group operates 507 stores across the country, 271 hypermarkets, 100 supermarkets, 67 discounters, 22 club warehouses, cash cow business model, and 47 QSRs that total over 600K square meters of retail area. Investment thesis. Strong tailwinds for modern grocery retail. Number one, increasing disposable income. Number two, urbanization. Number three, below average penetration of modern grocery space, 46 square meters per 1,000 people. And to calibrate our base rates, this is a 50% of Thailand, 44% of Malaysia, and 29% of China. Business model that taps into both ends of the consumer spectrum. Only one of the big three that caters to the low income group, able to do so without diluting its brand equity by creating a totally new brand and concept for the high income group, top 4% of the population, called S&R, which is a club warehouse like Costco in the US. Quite resilient to fluctuations. The high end segment of the population are quite insensitive to prices, and due to rising inflation, I believe the middle segment will seek to spend more economically. Consolidation trend through M&A. Top three guys only have 50% market share of modern retail in 2022, up from 37% in 2010. In the Philippines, major retailers are constantly primed for acquisition, especially for provincial family-owned supermarket chains, 3 to 10 stores, which PGOLD has demonstrated their acumen to pay rational prices and integrate seamlessly. Founder CEO family has 56%, 7% direct and 49% indirect. And the bulk of his wealth is tied to PGOLD's stock price. Hence, he has significant skin in the game. Since the IPO, he and his wife, a vice chairman, haven't raised their salaries, which are 118,000 US dollars and 47,000 US dollars, respectively. However, this reputation is not the best, as there were rumors that he built his wealth through smuggling. Although now he donates to the Marine Police, which could be to ensure no one else can smuggle now that he has become legitimate. Overall, for a company growing 15.5% sales, 19% EBIT, and 11% EPS CAGR since IPO in 2011, in a good situation where it's gaining market share. Plus, entire market is growing, and through multiples, 3.4x EBIT and 9% free cash flow yield in FY 2022 seems extremely cheap. History of Pure Gold. In a very brief nutshell, 1989 opened its first hypermarket in Mandulayon. 2004 launched its loyalty program, growing at an average of 3 stores per year from 2002 to 2006. 2008 introduced a new format called Pure Gold Junior Supermarket. 2010 operating 62 stores and launched another format, Pure Gold Extra. It's a discounter. 2012 acquired S&R Membership Shopping, was named Karela, which had 6 membership shopping warehouses. Enters into the high-end segment. 2013 acquired 15 stores and opened 40 Pure Gold S and 2 S&R. 2018, the group operates 208 hypermarkets, 104 supermarkets, 29 extra, 13 mini markets, 16 S&R, 38 QSRs, for a total of 408 stores. Two brands to tap into opposite ends of the consumer: Pure Gold and S&R. PureGold, hypermarkets, supermarkets, and discounters, 61% of sales and 55% of EBITDA. PureGold focuses on retail customers with average monthly income of PHP 12 to 80K, 235 to 1,600 dollars, and small mom and pop stores called Sari Sari stores. They have a unique loyalty program from the Sari Sari stores, TNAP, which has over 350K active members at the end of 2018 and supplies to over 480K Sari Sari stores. The company estimates that 30% of PureGold only sales are to these retailers, and they are the only one of the big three that taps into this market as they are the price leader. With Saris being the majority of the market, a third bridge expert in 2017 said PGOLD is situated in a very nice spot on the market as they cater to both modern and traditional trade. Transcript attached. Supply chain: 88% of inventory is delivered directly to the source by suppliers, only require 3 days of lead time. For the 12% of suppliers who are unable to deliver directly, they offer the option to drop the goods at a outsourced 3PL facility, which will be forwarded to their stores. No cost advantage, but usually more reliable. Target to open 20 to 25 new stores per year. S&R membership, club warehouses and quick service restaurants, 39% off sales and 45% off EBITDA. S&R serves the wealthy and aspirational segment with monthly income over PHP 80K, 1,600 plus dollars, which would put them in the top 4% of the population. Acquired in 2012 for PHP 16 billion, $350 million at 16.5x PE, and in 2021 it generated PHP 4.5 billion in net profit. Like Costco, customers must be a member, PHP 700 or $13 annual fee, to shop at S&R, reaching 864K members as of September 2019. 60% of the products are imported primarily from the US, and SKUs are in bulk sizes. Their 37 QSR are just to make the environment more conducive for families and hanging out. Sell American food, mainly pizza, hot dogs, burgers, fried chicken. Very small, only 7% of S&R sales, 1.5% of total sales. Company guided that it will open 2 new S&Rs and 8 to 10 QSRs every year. And at current GDP estimate, the saturation is 40 S&Rs, as this format will only appeal to Metro Manila area. Currently a duopoly with Landers, which entered in 2016 and has a 24% market share versus S&R's 76%. Personally, I've never had the chance to visit a Costco, so I have to trust this reviewer who says S&R is a membership store here in the Philippines. When you go inside S&R, you would think you are Costco. It looks exactly the same. Same shelving, same products, everything is the same, except in most cases, it is smaller than the average Costco, and the product selection is not quite as good. Consolidation and M&A. Since 2012, the big three players have done a number of acquisitions to consolidate the market. They seem to believe that if the industry becomes less fragmented, the grocery players will have more leverage on the suppliers and will reduce margin pressure during times of high inflation. Since 2011, Robinson's RRHI acquired 11 companies. PureGold has 5, and SM bought 2. As seen above, PGOLD typically pays 8 to 10x PE for traditional grocers. Karela, now S&R, was a unique opportunity as it was the only club warehouse business. Management's preferred targets are provincial family-owned supermarket chains with 3 to 10 stores and with next-generation owners who don't want to manage the business. Market has taken unkindly to the fact that PGOLD raised PHP 4.6 billion, $91 million in January 2018 19 through a share placement, but have not deployed it yet. Company said that they are in talks to buy a regional chain that is more than 10 stores in Q3 2019 earnings call, but they told me they would rather forego a deal that would overpay because the founder is almost 50% of the company. Personally, I don't think the company should be penalized for being prudent instead of having a buying growth at all costs mentality. On the other hand, the company couldn't give me a good rationale why they issued the new shares at PHP 45 when the share price was 48 to 49. 7% discount to market price, which is a negative for me. Competitive intensity. How's the landscape and how are the main players? The big three, 45% of the modern grocery retail, since it is said that a picture speaks 1,000 words, above is my attempt to map out their footprint in the modern grocery retail space. Small versus large format. Broadly speaking, both SMM and Robinsons like smaller formats like convenience stores, while PureGold is going for larger scale formats in the club warehouse strategy. Who is correct? I'm not sure. Although data seems to say that convenience stores have been growing at a faster pace than hyper and supermarkets in emerging markets. Good Good study by McKinsey on the shortcomings of hypermarkets in EMs versus the success they have seen in Europe, maybe not anymore in recent years. Characteristics of countries where hypermarkets prospered. Number one, a good road networks. Number two, high or growing car ownership. Number three, large middle class with decent wages and stable employment. Number four, sufficient room at home to store groceries in bulk. Leaning on Eric's experience in the sector, he thinks there are no international rules for grocery on which format will win. The key is to focus on the core population. Be disciplined in pricing by reinvesting any profits back to the consumer and have positive like for like growth. SM, the market leader, mainly caters to the middle segment. Robinsons also targets the middle, but also has brands that tap into the upper class. Finally, PGOLD targets the low income group through the PureGold brand and high income group using SNR. Competition amongst the three is fierce but not irrational, as and Robinson want to maintain 90 to 20% GPM, and they view PureGold as the price leader, hence its 70% GPM. Due to PGold's higher asset turnover, lower rent, and operational efficiencies, EBIT and NPM are 50 to 150 basis points higher than the two others. So everything is fine on the competition front? Not entirely. While competition among the big three has been under control, actually, PGold has been gaining market share steadily. The problem is competition against the provincial supermarket chains. Think 5 to 10 stores. As PGold continues to expand outside of Manila, they realized the other 50% of the modern retail market weren't going to just roll over and surrender their lunch. Like how the European hypermarkets experience firsthand a cost advantage from scale and better supply chain can be negated by competition who do not pay taxes. Corporate tax rate is 30% in the Philippines. Just as SM and Robinsons are price followers when PGold is around, in provincial areas, PGold is typically the price follower to the small supermarket chains. In a normal inflation environment, grocers can pass on inflation to consumers. During periods of high inflation, like 2018, when PHP depreciated 5% against the US dollar and shortage of rice, which accounts for 9% of the current country's CPI, leading to 5.2% inflation versus 2.6% for 10M 2019, these smaller supermarket guys either increase prices slightly or don't increase prices. Thus, PGold, in those reasons, will be unable to raise prices as much as those in Manila, where SM and Robinsons are present, which is one of the reasons GPM declined from 17.3% in FY 2017 to 15.8% in 2Q19. Why do I think the probability that the situation will improve is higher than the situation continues to deteriorate? Consolidation in modern grocery retail explained in above section. Increasing share of a modern grocery retail and proportion of the entire grocery retail market. currently 32%, and it is expected to increase by 1 to 2 points every year. If we take an outside view, the modern grocery space with 1,000 population is fairly low compared to other developing countries like Malaysia and Thailand. China seems to be an anomaly, which is probably a level that will never be reached in Philippines. Greater tax compliance. When Philippines become more developed, I would expect the gray market to be gradually eroded through more stringent penalties and better tax monitoring systems, thereby eliminating the biggest advantage of these provincial supermarkets. Valuation. Mhm. Catalyst special dividend on implementation of a formal dividend policy, acceleration of their repurchase plan. He sees a 123% upside. Thank you very much for tuning in. See you next time.